Good morning. Welcome to Stock Market Today for Tuesday, November 24th, 2020. This is your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can find me on Twitter at @DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider, and that hits your inbox every trading day before the market opens. So U.S. equities closed higher on Monday with value outperforming growth once again. At the sector level, it was energy, financials, industrials, and materials leading the charge, while REITs and healthcare were the weakest sectors. Small caps led the charge once again. Treasuries were weaker with the curve steepening. Dollar was stronger on the euro and yen crosses, but weaker against sterling. Gold finished down 1.8%. WTI crude settled up 1.5% after gaining about 5% last week. Now, as we get to the desk this morning, S&P futures are up about 80 basis points after Asian markets were mostly higher overnight, with Japan and Australia leading, while China did close down. European markets are seeing good gains. Treasuries are unchanged to slightly weaker. Dollar is weaker on the major crosses. Gold down 1.6%. WTI crude is up 1.1% to kick us off on a Tuesday morning that starts out with small caps having extended to the upside. Take a look at the bottom of the chart there. The IWM small cap Russell 2000 ETF extending from the breakout above those 2020 highs. S&P 500 continues to churn at the breakout level. That's the breakout from the high in September. We've been trying to push above. In fairness, we're kind of holding right at that level. Should we give way here a little bit? Support is at 340, then 320. Now, we are working off overbought conditions, and that's important. Why is that important? Because I think that if we can get closer to near-term oversold, while S&P 500 or SPY holds this zone of support here, then it sets the stage to become more aggressive on the long side of the portfolio to position for a potential rally into the end of the year. Qs continue to churn within the consolidation that's been in place since early September, as the mega cap and large cap growth and tech themes have been a source of funds here in the near term. 260 is key support. Holding above 280 increases the odds of the September highs. Is it going? But the question is, will the relative strength show up? We don't know. In an ideal world, we just want to see everything trending higher, right? That's a bullish development from a breadth standpoint. We've spoken about breadth in the past and how it is constructive for a bullish view on the equity market. Drilling down a little further on IWM, support near 170, then 160 below that. Now, as I said, we are working off these overbought conditions. So the way I like to frame it up is overbought, oversold tells me where we are within the context of the existing trend, right? Uptrend, overbought within the context of an uptrend. Should we get to an oversold level and hold support, that to me sets the stage for becoming more aggressive on the long side of the portfolio. At least that's how I'm framing it up from a roadmap perspective. Let's take a look at our market in a minute now. What are we writing about today? Well, small caps lead as stocks trade higher on the back of another COVID vaccine. Third Monday in a row with positive vaccine news as it relates to COVID. Maybe a trend is developing, maybe not, but it's certainly acting as a tailwind to the rotation trade. Industrials continue to move higher as rotation theme persists. We've seen that. Financials and energies continue to see a relative improvement. We'll take a look at what both of those look like here a little bit later on in the show. But I have to be open to the idea now of being less of a hater on the energy space. Equal weight tech is actually trading at 52-week highs, and I think this is important. I think the weakness in tech is largely a function of cap, right? Equal weight tech trading at a 52-week high. In one of my other notes that was published today, I highlight Taiwan trading at 52-week highs, Taiwan tech heavy. So if I thought we were going to see some sort of really impending move lower in tech, I would expect to see equal weight lagging. I would expect to see Taiwan rolling over, not seeing it yet. So again, broadening out the view just a bit. Futures point to a higher open today, as I said earlier. So we look at the major indices from a power bar perspective. The Dow added 1.16%, 4 to 4 bulls to bears there. S&P 500 up 62 basis points, 124 to 53, still solidly bullish in that camp. NASDAQ was an underperformer again, finishing unchanged on the day, 1615 bulls to bears. Small caps, your leadership on the back of that COVID vaccine news, 822 to 201 bulls to bears there. Bonds down, ticks and yields higher. Energy, your best performing sector once again, up 7% on the day. 2 bulls, 1 bear there. But I think it does make sense to potentially be looking for ideas in the space and looking for shifts in relative strength, looking for signs of personality changes within the group. It looks like it's beginning to play out. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Major indexes are mixed. Let's take a look at our screen now, our stocks of the day. So given the fact, as we'll see later in the show, that tech on an equally weighted basis is trading near a 52-week high and actually outperforming the S&P 500. I think that's an important distinction to make as well. I wanted to run a screen of the subsectors within technology here at Chaikin Analytics. So using these 4 ETFs, XITK, XNTK, XSD, and XSW as a starting universe, right? That gives us 269 names. Let's drill down to the ones that are very bullish and bullish. That knocks us down to 58 names. And the ones where the relative strength is still strong. So that takes us down to 31 names within the tech space that might warrant your attention. It's easy to kind of, hear the news. You can see it, right? Where everyone's talking about the rotation, and you may say to yourself, well, I just want to get away from tech. And I don't think that that's the right idea. Remember, my view in this course of this rotation is broadening out the opportunities that we're looking for within the market. That doesn't include getting rid of something wholesale like tech. It includes, being a little bit more selective, but saying to yourself, equal weight tech is probably okay. And it's trading at a 52-week high. And the weakness that we're seeing is largely a function of what's happening in the mega cap stocks, right? So with that in mind, I wanted to drill down. We get to 31 names that could potentially be interesting when they set up, i.e. when they become oversold, especially if the markets become oversold and hold those support levels that we're talking about. Now, we highlighted First Solar in our note and on this show yesterday. Take a look at a name like EXL, Corvo, right? The semis have been solid. AMAT, semi-strength is largely a function of what's playing out within the equipment space. So you see names like AMAT and Lam. Chinese tech has been strong. Say hello to JD if you're potentially looking for ideas. SolarWinds was recently a featured name in my market survival guide for Chaikin clients. So there are opportunities within the tech space. So I don't think it makes sense, and I don't think it's fair to just throw it by the wayside. Taking a look at the sector tracker now, movement of the last 5 days, energy, industrials, and financials, only groups that are higher. Energy just ripping top side off the lows here. It's kind of an interesting development. Discretionary comms and tech, middle of the road. Staples, REITs, healthcare, and youth. So you have your defensives at the bottom of the list. That is encouraging if you are bullish. Taking a look at the industry in focus now, speaking of the industrials, transportation services, past 6 months, been a good performer, leading the S&P by over 18%. Power bar ratio is solidly bullish here at 10 to 2, currently ranked number 8 of 21 subsectors, moving up 2 slots over the past week. So if you're looking for some names, ArcBest is very bullish, Hub Group, HUBG, and Macari Infrastructure, MIC. All 3 of those stocks are very bullish. They probably warrant paying some attention to. All 3 are holdings of XTN, the Spider S&P Transport ETF, which has a bullish rating. Trend is strong here above the rising long-term trend line as it pushes towards 52-week highs. Now, money flow, a little bothersome. We're also overbought, as the rest of the market has been predominantly overbought. But look at the relative strength, the intensity of which is picking up here in the near term. So when we talk about that rotation and we say, well, industrials have been improving, well, taking the analysis a step further, you can see that a lot of that improvement is in the transports, and there are 10 bullish stocks that might warrant some attention here in the near term. As we take a look at what's trending now, yesterday's S&P 500 movers and shakers, our gainers and losers. The leaderboard, you should be able to see the theme here. Those are all energy stocks, right? Energy up 7%. Leader, I think it's been a leader, 4 or 5 of the last 6 days that we've been highlighting these ideas on the show and talking about what's going on and talking about the rotation that's playing out under the surface, right? I mean, these are names that are hated. Energy is about 2% of the S&P 500. It's massively underowned. Any signs of life here can lead to moves like this, which is why I think we need to be paying attention for signs of personality changes, those shifts from big underperformers to now beginning to outperform, right? We try to spotlight them for you where we can. I think you want to be paying attention to that. The relative work has really been helpful here for the past nearly 3 months. So Oxy up 16%, APA up 12, Diamondback up nearly 12. EOG, the only bullish stock of the group here, of the 5, up nearly 11%, and Valero, VLO, up over 10%. Nothing company specific that I could see on any of these names. Looks like largely a function of a shift into the energy complex. Loser side of the board, again, not a lot company specific. We're kind of in a news vacuum here as we head into the Thanksgiving holiday. Newmont down with gold. Gold's been under pressure. We've highlighted that in our notes, down 4.8%. Market Access, MKTX, a bearish stock, down 4.8%. CTLT, part of the healthcare group, which has been weak of late. Stock's been strong, but seeing a bit of a pullback. STE, nothing company specific, down 3.3%. And WST, again, part of healthcare, down 3% on the day. No company specific news driving the trading there. So when we talk about sector rotation, this is what we're seeing. And the top chart is energy relative to SPY. The bottom chart is financials relative to SPY. Now, we've touched on financials quite a bit over the past couple of weeks. And, we highlighted the banks. Remember, last week we highlighted insurance, which was showing signs of a personality change. But, look at the steady downtrend in energy and now the big rip to the upside on a relative basis. I mean, listen, we're still in a downtrend, right? But this is a solid move that I think we need to start to pay attention to. Momentum showing us that there are signs that the downside trend is losing some steam. So we highlight this in my note today. I go through all the sectors in detail on a relative basis every Tuesday. So I think it just makes some sense to really, I think we're at a point where it's hard to just wholesale dismiss things. I think you need to be looking really objectively at what's playing out in the market, especially as it relates to relative trends. And we're seeing signs of a potential reversal here in both of these formerly hated groups that had underperformed for a really long time. I mean, these are weekly charts, folks, weekly. Okay. These are big downtrends that are potentially reversing. So we want to be mindful of that. Let's take a look at tech, right? XLK relative to the SPY, shifting back to a daily chart. You can see the relative downtrend since those early September highs. We've broken below the 50-day moving average, which is now declining. We're still above the 200-day, which is in play. I think in an ideal world, you see the 200-day move. You've seen a series of lower highs for the RSI of the ratio, all while on an absolute basis, tech has consolidated. But remember, this is straight up S&P 500 tech, right? This is where, your big stocks have the biggest weight. All right. And there's no doubt that the group has been under relative pressure. And on an absolute basis has gone sideways. We can see that here. The lines are drawn. It's fair, right? It's what's happening in the marketplace. But if we take these analysis a step further and look at S&P 500 tech on an equal weight, RYT relative to SPY, topside breakout, right? So that tells you that the weakness in tech is concentrated in the biggest names. Right? You have a topside breakout above the 50-day moving average, above the 200-day moving average, both of which are rising, all while the RSI is in bullish ranges. That's the RSI of the ratio. And on an absolute basis, RYT is breaking to new highs. So hence the screen that we looked at earlier. So that's going to wrap us up for today. Take us for a test drive. You get my note for 2 weeks. ChaikinAnalytics.com/test drive. Every Tuesday, I go through relative strength. Hope that everybody has a great day, and I will be back here with you tomorrow. Be well, be safe. Talk to you soon.